Hello, good morning all. Welcome to Rally Academy's daily market review, the morning market review. My name is Olabisi Olaleru. Please, if you can hear me, someone should type chat or audio rather on the chat. If you all can hear me, type audio, please. All right, good to know. Let's give an additional 5 minutes to those that might be having connection issues. Then we'll kick off. So just exercise patience for additional 5 minutes and we'll kick off. All right, good morning once again. Olabisi right here. Just for confirmation, quick one. Can anybody type audio if you can hear me loud and clear? We're about to start right away. Yes, audio. All right, so I take that you can all hear me. All right, so today being the 17th day of July, Monday morning, judging the third week of this month's trading activity. If you cannot hear me, please check your connection from your end. Several other persons can hear me loud and clear. So most definitely that's coming from your own end. All right. So first off, we'll be looking at what the market does from two perspectives, as we always do. Fundamental analysis and technical analysis. It's not enough to sit in front of your system, do your analysis, your chart, and the rest without considering other variables that might get into the consideration and then shift the direction of price or affect the perception and analysis of several other persons regarding trading. Fundamental analysis is a very, very important part when it comes to trading. And in the past week, even beyond the week, we've seen the weakness in dollar. So the major talking points from the fundamental part is the fact that the dollar index has pummeled in past weeks. It's so bad that the dollar index has gone to its lowest in about 1 year. Price has not gotten as low as it did last week, Thursday, since March of last year. So all of this and some series of other data that fall below forecast made the dollar very weak. Hence, the issue we've seen with dollar across other major pairs, and dollar has been down. For this week, investors will be keenly targeting the US unemployment claims to see whether there might be a gradual resurgence, same as CPI coming from Canada and that of GBP. Let's move over to Forex Factory so that we can review this news before we go to technical analysis. So I'll be switching my screen now to the Forex Factory calendar page. If you can see the Forex Factory page, someone should type Forex Factory page. Someone should type Forex, please. All right. So from the data you can see on the Forex Factory here, look at the major points, as I've said initially regarding USD. The CPI came negative, as you can see here. Then the core CPI, which is an adjusted value in variation for the CPI, excluding the energy and food. That means we're not looking at the direct home consumables, but other general data. Look at core CPI negative. Then core PPI also negative. All of this shows that both at the manufacturing level and the consumption level, the US is going through, the economy rather is going through what some turmoils right now. Things are not following the path of growth as expected. All this also builds up on the point that during the last FOMC, they didn't agree to increase the interest rates. And that's to let you know that the economy is not following the adjusted or planned path of growth. For those of you that have joined in my previous classes, I've explained the implication of economic growth to inflation. So anytime the inflation rate is not increased, it is because the expansionary capacity of an economy is not fully utilized or not even on that path. So in that case, there's no need to contract such an economy. So all of this news here are what made the dollar weaker for last week. So it's not just the strength of those other individual currencies, but more of the weakness in the dollar that is giving that strength to all the other currencies rather, thereby weakening dollar in the currency pair. So for this week, the major news to be targeting is by tomorrow, we have the policy meeting minutes. This will indicate whether there will be a hike in their own interest rate as well. If this comes, then the AUD should strengthen. Then you have the CPI for the Canadian dollars. If this CPI comes positive also, it shows good consumption power, and anytime consumption power is high, that means there's money to be spent. It's also an indication that inflation is looming, and that's an expansionary economy. Those are things that show positivity in an economy. The retail sales here will not do much for the USD, but it's not bad. It might still give some confidence, some sentiment, but the major outline will be this unemployment claims for this week. It might give a dint of hope for dollars. So let's go to the chart now and look at some technical analysis and possible trade for today or the course of the week, as the case may be. So I'm switching over now to the MT4 trading platform. If you can see my chart, please type chart. I've moved over to the MT4. If you can see my chart, please type chart. All right. Splendid. Many of us are seeing the chart, so let's commence. So with Euro USD, you would have seen this resurgence. It's where this had started since way before last week. As you can see, this was the turning point 2 Thursdays ago. And look at the movement here. Friday, price has stayed within this range here. As you can see on Euro US, you can see that price has been in a narrow range, and the range point is just 40 pips. So as it is right now, if you're targeting any trade on your Euro USD, first off, keep in mind that the fact that price has moved so much in a particular direction, most often than not, if price trades in a particular direction for a week, I've realized over time that the Friday always retraces. Maybe not a reversal, but a reasonable one. But you can see here on Euro USD that the price could not even make any reasonable retracement compared to the price movement previously. And now price has been within this range values. So what you should target for here is this. If price can break above the current resistance with the highest point of resistance region as 1.12464, that's look at the closest, the recent high, as we have here on this inverted hammer here. Once, or the shooting star rather, once you have this here, any price that breaks above here and stays back to retest this resistance, I've given the value of the resistance point before. The highest point of that resistance region is 1.12469. Once price can break above it and makes a retest, that is your probable point to start your what? Your buy limit trade, targeting that price comes to make a retest and continues back upward. And if you're thinking for the retracement, where you'll be more comfortable at, wait for price to break below this support region we have here at 1.12007. Price needs to break below here before you can confirm price is coming back down. But another thing we should keep in mind, I noticed there was a formation of divergence. Let me change the view. On our Euro USD. Price on the chart indicated a higher high, even though it's not that steep, but it's still indication of higher high because this price where I am right now is higher than this previous high. But on our RSI, we have a lower high. And looking at the lowest point in between these two prices, you can see that this, meaning that same support I've initially outlined is our point of trigger. So if price can break below 1.1203, that's taking cognizance of this shadow now, and breaks below it, which is the lowest point here, that will ensue possible reversal or what? A longer directional retracement from this current trade right now. So for Euro USD, if you consider a buy, allow price to break above the current high, make a retest at the resistance level there, which will now become a support for your buy limit, or wait for price to break below the closest support or this trigger point for the divergence here, 1.12033. Moving over to GU, the same thing is what we can still notice here. Price has been on the upturn. Price has rallied for close to 2 weeks now, a week plus since last 2 Thursdays. Price has been on the uptrend. And you can see that that Friday retracement here was better than what you had with Euro USD. Price is right here now, struggling to still go up. But if you check the divergence, because I checked that earlier on, and I noticed that this also has the same formation. Because for those of us that have been used to trading EU, GU, you will notice they often go in the same direction, most often than not. So from the setup, this is a close higher high here. But here, it's a lower high. And the lowest point in between both is here. Price has already broke below that. Price tested it and held price back. So right now, if you're checking to place a trade on your GU, you need to try and confirm first. This price going up, there's a resistance holding price right there. Can you see on lesser time frame that there's resistance there? Without going to lesser time frame, you need to have seen this, but there's a verified resistance there because price has rallied around that area and it's just what? Moving around there. So from this point on, I expect price to still come down. That's the truth because it has bought for too long. Check on your RSI, your RSI, you'll have seen what overbought point before price going down. And this place is a verified resistance. So price should go down from this point on. But if you have any sell trade, target this point here as your take profits. That's this sharp shadows you have below here, the closest here as your what? Your take profit point. Then have a tight stop loss above this verified resistance, which is, as I have it here, above 1.30987, 1.3097. That is the region where you have what the verified resistance at the top. USD CHF also, you've seen that USD CHF was down to, price retraced. Looking at the lower time frame, price hits a verified resistance and price is hanging in a balance. When you have situations like this, you need to allow price get to a what? A reasonable point before you target a trade. So there's a support right now preventing price, which is verified also at the lower time frame. Below that point is 0.85921. So allow price to break below here. For those of us that are conservative trader, wait for the retest, because anytime a support is broken, ideally that support turns out to become a resistance, thereby to prevent price from going up as well. So the more verified you have a resistance or proven resistance, all these major confirmed resistances or supports, anytime price breaks them, it turns out to be the opposite. That means it also will become what? A verified support, because over time it has held price. In time past, you can see it here that price was held to. From what you can see here, look at here, price was held, price was held, price was held. So the same reason it held price above too. So if price should break it, wait for a retest, then target a sell trade at the retest. That's for your USD CHF as of right now. Going to USD JPY, all of these are known. You can see that all of this went in the same direction, based solely on the weakness of what? The dollars. From what I said earlier, if price trades in a particular direction for over a period of time, especially when you use the total frame size of your chart, this is what I mean. H1, zoom out to the list. There are 5 zoom rates on your chart. So once you're at 1 or 2, that is a good rate to check your chart. You will notice that in this case, you can see that price has moved from almost at the top to the end of your chart. You would expect price to retrace because price cannot fall flat in a direction. Price is always a fluctuative variable, up, down, slightly, and it moves diagonally in a direction, either upward or downward. They're indicating an uptrend for an upward movement, a downtrend for a downward movement. So anytime price moves from the highest point of your chart to the lowest point of a chart, you expect a retracement before price can now decide whether the strength is enough to continue in that direction or push back up. Because most persons on these trades and most other algorithms also would have picked profits or protected profit in the course of all of these trades while waiting for retracement and reversals. So don't get stuck in any of such. So whenever you have this, you expect price to make a slight retracement, which is what we've been experiencing with some of these other trades there. But the fact that in relation to the movement, those retracements are too small is what lets you know that price should still move upward. But here's now the challenge. Dollar has not shown an individual or intrinsic strength of its own. That's why you notice that most of these trades are within range. If you can check, all of them has been within range. The price as it is looking for something to build on that will push it up to help the strength of dollar, and that is not coming anytime soon. That is why, rather than plunging into a trade, wait for trade or price rather to break above major points so that you can be sure of the right entry point. So as you have it also on your USD JPY, you need to check first whether price will break the closest resistance there. So note support and resistance point for all of these trades mark their ranging point. You can see, look at the ranging point here, look at it here. This here is where price is ranging. And with this range, it's still indicative of a downtrend. Look at it. Even though price is ranging, it's more in tune to price going downward until this particular buy candle that broke above it and has built on this particular the trend line. Keep in mind also that a trend line serves as a support and resistance. So for those of you might have heard before, dynamic support and resistance, because these are supports and resistances that change by the direction or position of where price is, unlike the horizontal resistance and support you have. Moving average and your trend line serves as dynamic support and resistance. So look at price. Price has broken above this and has held price above. So if price should break above this current resistance we have here at high points 138.696, 138.696, that is a point to target what? Price on the upward, and looking at the closest resistance also here for take profit above here, 139.036. For AUD USD, same as all, price gone up. The retracement here was quite reasonable compared to others. Price hits a verified resistance and has moved down 85 pips. So as it is here, until this stone cold support is broken, stay off any trade on AUD/USD except you have a sell trade ongoing, in which case also protect the profit you might have made on this. And for a stone cold support, we are more confident of a retest once this particular support is broken. A stone cold support is like flipping your jacket inside out. So it's more confident that price will come back to test it. So the chances of retest on a stone cold support is higher. So don't rush into a trade on AUD/USD. Allow price to break this support where price is right now. Let's look at it closely on a lesser time frame. You can see it's the same thing. It's on 15 minutes, have it as verified support, as you can see here. But price is gradually what? Trending downwards, even though on the lesser time frame is not a good indication of trend, but it's just giving you the sense that the strength on the downward is stronger than what? The upward sentiment. So if price should break below this stone cold support here, wait for a retest. That is your good time to start a trade on that as well. USD CAD had almost one of the most shocking movements on Friday. As you can see, the buy was strong, over 125 pips movement. So for today, let's sit on lesser time frame. Price a verified resistance as we have it both on the 15 minutes and the 30 minutes. So this verified resistance is holding price down. So don't work with this here because it's too narrow here. It's hanging in the balance, as you can see. So I would rather work with the 30 minutes here. Don't plunge into a trade here until this verified resistance here is breached. And we have it at the higher level at 1.32356, 1.32356. So if you're on your chart also, note out all of these verified support resistance points so that you can note the trigger points where price will break before you start your trade. For gold, same old. Price is ranging right here. You can see it has hit a verified resistance, 3 test counts, and price is within this point as well. On the support, as we have it here, on a lesser time frame, the support is stated as verified here. I can see with 2 test count because price has gotten there 3 times. The test count is a function of how many times price got there, and the first one is taken off, so I can be sure that the subsequent other ones matter. So it did not count this, but see, 1, 2. So this current formation now will be the 3rd test count. That shows you that this, to a large extent, is dependable. So wait for price to break this, and that should be 1949.69. Price breaks below there, wait for a retest, then you can start your what? Trade going downward on gold, because price has gone way too high. And ideally, most smart traders, especially those that are basically on technicals, would have been taking profit by now, because price has moved way further from the lower point to the higher point. Price has rallied for over 700 pips. Over 700 pips. So this is enough to let you know why some of this retracement we're seeing right now is happening. All right, let me check to see One or two questions. GBP USD, we've done that already. At what regions do you set order on Euro USD? Target the support resistance below them, because price was ranging, as we stated earlier. The highest point recently that Euro USD has gotten to is where you're targeting. If price breaks above there, comes back down to retest on that same point, then you can start a buy trade or set a buy limit there. And I said also the closest support, right there, and I even showed a trigger point for a divergence, that once price breaks below it, that is when you can target an entry point on Euro USD. Okay, US 100. Difference between entering trades on 15 minutes and H1. If you're trying to check trends, direction of price on a higher time frame, H1 is your best bet. That's the least possible to draw a trend. Some might consider 30 minutes, but that is not stable enough. It's like when you run a statistics or experiment and you're trying to observe, the larger your sample size, the more realistic your findings will be. So you need higher time frame to set trend. So when you check H1, it's so that you can see what trend it is. And if you move beyond H1, it's still good, but the challenge is this: for most of us, at least most of our clientele that I know of, our capital does not suit positional trading. The best we can be at, many of us are swing traders, just following momentum of price, or most of us are intraday traders or scalpers. So in which case, the lesser time frame is a better entry point, but that is when you've known what the generality of the price action on the higher time frame is. Take, for instance, you've seen an uptrend on H1, then you know you should trade in direction of such. So going to lower time frame at your 15 minutes, you are looking for probable support points, good support points to enter trade, or when price breaks above some lesser resistances to enter your trade, so that you don't start a buy trade at a support, thereby holding a drawdown for too long before you come into profits. So that is the difference between 15 and 1 hour, and why it's better to trade or enter trades at that level. How will you be sure that price has broken a resistance? All right, let me show you something here real quick regarding to that question. Let's use Euro USD here as an example. Let me zoom in slightly. I've changed over to Euro USD. Please, if you can see my chart, Euro USD, we have a support and resistance showing now. Please, someone should type chart. I want to be sure you're seeing my page now. Resistance is in magenta. You have a cyan for your support. Okay, all right. All right, so please follow the crosshair. Over here, this particular candlestick here, let me zoom in more. Following the crosshair, this did not break this resistance because it's still on the resistance. This next one also did not break it. In short, let me draw arrows. I think that might be better. Just a minute, please. I'm trying to use arrows as better indication. All right, please, if you can see the arrows, please, I need you to type arrow. If you can see the arrows on the chart, type arrow. I need to know whether the Zoom level is good enough so that I can start explaining. Arrow, 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 please. All right, thank you. Looking at this arrow here, that candle did not break the resistance. Please bear in mind that when we're talking, it was a resistance, but it's now showing as support, but we're talking retrospectively now in the past. This also did not break this resistance then because it's still touching it, is lying on it. For the candle that breaks a resistance, it must open and close above it, which is what you have here. Even though it's a bearish formation, this is the candlestick that broke the resistance because after opening above it, it came to test the then resistance, but now acted as support. That is why price is held up. Hence why you're seeing this upward arrow. This is what broke this particular resistance and now became a support. Over here also, this other candlestick here, as you can see, is lying on this support, but then would have been a resistance. Hence the downward arrow. But this other candlestick here, you can see that I have a red arrow on the candlestick itself, broke this resistance. That's why it is resting on it as a support. It is no longer a resistance to this candle. But considering this other support level here, that was a resistance in the past, this candlestick also did not break it. As you can see, that is still on the resistance. This is also still on the resistance, but you can see that this next one has broken it and price moved upward. So that is how you can confirm which candle broke the resistance. The same explanation goes for support also. If a candlestick is still lying on a support, you cannot state that that candlestick has broken that support. It is the next one that opens and closes below it. That is how you're sure that is the one that broke it. That is why anytime you are targeting such as a trading or entry point technique, it's always better to set a limit trade. What I'm saying is this: you're waiting for a support to be broken and price to retest it before you start your own trade. You allow price to break it. You now set a sell limit, knowing that as price has broken that support, if price goes back up to test that support, the support now becomes a resistance, thereby pushing price down. Hence, your own sell trade starts at almost the closest point, and you would have a tight stop loss because your stop loss will be just above that resistance. So even if price will go against you, your risk is minimal and narrowed. On the flip side, the reverse of it is that if price is struggling at a resistance, you allow it to break it. After breaking that resistance, those that have higher risk tolerance can start their trade immediately. But for those that are conservative, rather than starting a buy trade, you set a buy limit below that price because you expect price to make a retest or retracement. And when price comes back to hit that previous resistance, but that has now been broken, the resistance will now turn to a support and hold price up, thereby picking your buy limit trade and price goes up in your favor. And you can also set your stop loss very tightly below that same support. This is how to use that for your entry point. How will you know this support range, or rather the range of resistance or support? For those that have good price action and knowledge, look at shadows and major highlight points, or this particular tool we have can be installed for you. Just reach out to your account manager. If they don't, they can reach out to me as well. So reach out to your account manager, can get the installation for this. So it makes it easier for you to highlight those support and resistance zones, not just points. Euro AUD. Please note, I'm checking through your questions and picking those that are more general rather than just an individual personal question. Please pardon me. If I've not seen yours, you can drop it again. Maybe as I'm scrolling, I scroll past it, not knowing or realizing it. Somebody is asking no TP, no stop loss. I've been giving TPs and stop loss all along, except maybe you joined late or your network is having an issue, sir, please. Hello, let me address this stop loss take profit situation. Stop loss and take profit are trading technique used to protect yourself against risk. They are risk managing tools. There are three ways to which you can manage them. First, you have risk to reward ratio. Hello, please, are we together? If you're still with me, please, somebody should type stop loss take profits. Let me address that right now. I need someone to type stop loss take profits. Thank you, stop loss take profit. All right. When setting your stop loss and take profits, there are risk mitigating techniques. There are three things you need to keep in mind, the three major techniques for using this. First is something we call the risk to reward ratio. For those of us that have a finance or business background, there's something called cost benefit analysis when you're making analysis of investment. What is the cost of this as against the benefit to give me? Does the benefit outweigh the cost? The same thing when it comes to stop loss take profits. So the risk to reward ratio states that on no account, your stop loss should not be more than half of your take profits, or your take profit should be at least twice of your stop loss. Let me repeat that. Your stop loss is either half of your take profits, or your take profit is twice of your stop loss. Meaning, if I have a trade on and I'm setting a stop loss of 10 pips, I should be looking at take profit of at least 20 pips. Likewise, if I'm targeting a take profit of 50 pips, I should have in mind to set a stop loss of about 25 pips. That's one method. The second method is something we call risk per capita. That means based on the capital size you have, there's a risk exposure you should not go beyond. And according to the rule, is a rule of thumb though, because it's a function of your risk tolerance or your risk appetite. But ideally, in the list of it consider on your series of ongoing trade. The error people often make regarding this is that they now have multiple trades and they now expose 10% on all of the trades individually, thereby expanding their exposure beyond the 10% ideal or expected. So what that means is this: if I have ₦1,000,000, that means my risk at any point in time should not be more than 100,000. So if I have 10 trades, I have to split that 100,000 across those 10 trades. If I have 3 trades, I split across those 3 trades. Then finally, risk per price. That means based on price action. Risk, how do you set it? That is when you use support and resistance. If you have a buy trade, your stop loss is below. Hence, set the stop loss below a support so that it can prevent price from going to your stop loss. We all are aware that when you have an uptrend and price is upward, even though you buy, price might retrace and at times might go lesser than your entry point. If that happens and price keeps going down, a support will most likely stop that downward turn and push price up. Hence, your stop loss should be below that support so as to protect price from getting to your stop loss. And you set your take profit below a resistance so that price can easily get to your take profit, because you don't want to hide your take profit so I can get a profit faster, but you want to hide your stop loss so that you don't make a loss on it. And if it's a sell trade, your take profit is below and your stop loss is above. You put your stop loss above a resistance so that it prevents price from getting there. And you put your take profit above a support so that price can easily take the profit for you. That is why you realize that in the course of my analysis today on all of the currency pairs we've checked, I've been clearly outlining where those support and resistances are so that you can target there for your entry points and your stop loss. So I've been stating stop loss and take profits. Can we take these trades as you said? Yes, wait for prices to get to those levels, breach them, then look for entry points. I've stated those earlier on. How do we All right. If you want to get strategies, all of our trading softwares, reach out to your account manager. They'll send you the link or install them for you remotely. You don't necessarily have to come to the office. Just reach out to your account managers. They can be installed for you remotely or sent to you so that you can install them from your end. Yes, you can get the recording of this class. It's a live stream session on our YouTube page. You can reach out to your account manager as well. The link will be sent to you. Go to our YouTube page. It's right there live. So you can listen to this afresh to pick all of these stop loss, take profit points, and support and resistance points I've been outlining previously. So it's a recorded version and even streamed live. So you can check it back on the YouTube page and click on notifications so that anytime any of these new ones come in, you get a notification to that effect and you can always go there, pick those entry points and your probable trades for the day. If you don't know your account manager, please kindly reach out to the office, call the office line, any of the office line you have, and we'll resolve that for you. All right, let me drop the YouTube page for us. Let me drop the YouTube page for us. So right there, that's the YouTube link. Click on it, like the page, turn on notification, bookmark it if you will, so that severally, whenever we have any of these other classes, even when you don't get to attend the class, you can get the recording and follow up on the information there. The Empire State News will not pull any effect, please. The Empire State News will not pull any effect, I repeat. It can only make a slight sentimental notion towards the indices, stocks. Please, when you are checking news, you need to know which news affects what. Please, are we together? Anytime you have a news directly related to currencies, then it affects the economy. The Empire State is a manufacturing index. So that's more of what? The manufacturing, the PPI. So if this comes out good, yes, it might intensify the sentiment initially built. And also, it might be another key thing that will give us a good landing for the core retail sales. All of this will only boost the sentiment because here it is. Anytime you have a policy, implementation is not immediate and you don't see effects immediate as well. So most times they are futuristic. So if Emperor State of Mind comes good, core retail sales looks good, the main thing that will determine is the what? Unemployment claims. Because if the manufacturing index shows improvement, how can manufacturing increase when people don't have jobs? Let me connect it first. If people are employed, productive capacity is increased, production would also increase, thereby showing advancement in an economy. So if you're telling me now that your production index is increased, which didn't show that last week, so I don't expect the Empire State to come positive. But even if it does, because anytime you're making analysis, especially with economic model, there's something called stochastic variable. These are other factors that you cannot fully consider because anytime you're considering things, you cannot consider every factor. You only be able to pick the main factors and those that are attuned or aligned to what you have, or those you can get fast. So if the Empire State manufacturing index comes out and it's positive, the core retail sales comes out positive, then the employment claims, these can now aid the performance of the USD. If not, it still will not pull anything. But for indices, the Empire State could affect, especially at US 100, because you have manufacturing firms there too. Because when you're trading indices, you need to know the composite. That's the companies that comprise, the stocks that comprise that particular index you're trading. So if they are more manufacturing based, this can sentimentally aid. But when they are not many manufacturing firms there, it may not really affect them. So keep that in mind. I'm still trying to pick some other questions before we round up. The RSI indicator is on your phone already. It's on your phone already, it's pre-installed. You don't need any plugin for that. Reach out to your account manager, but if you're right here on your chart, what you can do is at the top, look for that F sign. There's this F sign indicating functions at the top of your MT4 on your phone. When you click on it, you see indicator window and there's main chart. The indicator window, click on and look for what? RSI there. That's where RSI is on your phone. All right, if you love to join our basic classes, we have online classes and twice in a week, Monday, Tuesdays, and Wednesday, Thursdays. Kindly reach out to the office if you don't have an account manager. If you have an account manager, reach out to your account manager and all of this information will be provided to you. No, this particular support and resistance does not work on the phone, but there's a way to highlight it or indicate it on the phone as well. You had 3 trades, went back and you checked, all of them have closed. If you had stop loss or take profit set, it closes your trade for you automatically once price gets to those preset values. That's the essence. So that whether you're on your trade or not, this is another thing, a myth people have had for long, that traders need to stay on their system glued to their screen every now and then. That's not the case. When you set your trade, set your stop loss and take profit, it gives you peace of mind. You can go do any other thing you want to do. And here's the positive about it. It's a server-based command, meaning whether your phone, your system is on or off, it does not matter. So long as price gets to those particular set prices, the stop loss or the take profit would act. No, when you're picking a trade, you don't see the pips itself, but the pips is priced on your chart. So you can use the crosshair. The crosshair is the compass tool, both on your phone and system. You can use it to measure so that you can see the distance and know the price differential. Then you know the pips and you can act on that. The minimum to take a trade varies. There's something called margin. Margin is the value you're meant to have before a particular trade can be opened or allowed to stay open for you. And that changes based on lot size, that's the volume of trade, and also the type of instrument you're trading on. So it's not a direct answer that fits all. There's no one answer fits all for that, sir. Everybody trades news, whether you like it or not. If you have a trade ongoing and news comes out, you need to factor it into your analysis also, which is what we've done today. We've checked Forex Factory. We've gone to see which of the news can affect for this week, and then we made our what technical analysis so we can know where we can start our trades from. For RSI, if you are installing RSI as an indicator, use the default settings. That is good enough for you. But depending on what you want to use it for those that want to use it for entry points, if you're targeting retracement, those are people that are targeting overbought, oversold. Some people use it as a trading strategy. They only trade retracement and they target what? Probable points. In that case, rather than using 70 as the upper bound and 30 as the lower limit, you need to expand those values to accommodate for what? Minimal and maximal values. What that means is set 80 and 20, in which case you know that price has really gone far and the fast stretch, then you can use that as your good entry point for a retracement. But also don't just plunge into those trades. For instance, on your RSI, price is already at overbought above the 80% mark. Look for a good resistance for price to hit, then set what? Your sell limit. Price comes down retracement, you make some 20, 15, or even 30 pips. If price is oversold, look for a dependable support, either a proven support, a verified support. Set what? A buy limit, because when price gets there, price will retrace based on the fact that price has hit a confident level for retracement, and also price is oversold. Make some 20, 30 pips also. So people trade in this fashion as well. All right, the person asking about proprietary trading firm, that cannot be a general lecture response. So you can reach out to me directly. For those of you that have been asking about the phone number, let me just drop it here, because some of you are complaining you don't have your account manager to reach out to. But I know everybody has an account manager, just that you're not aware. So please, that's my contact. You can reach out to me. But please, also, if you want to know your account manager, for those of you that don't, reach out to the office line and they will direct your account manager to reach out to you. Thank you for joining today's lecture. If I've not been able to pick your own question, it's because we have a flurry of questions coming in and I need to pick those that are more general. So if you have a particular question you'd like to direct to me also, that's my contact. Or you can also reach out to your account manager as well to resolve some of these issues. Thank you for joining today's class. My name is still Olabisi Olaleru. Thank you. Have a great day and a peaceful trading day and week ahead. Goodbye.